All right. December 7th, I did a podcast on the Nikkei. Is that how you pronounce it? Nikkei? 225. And I had it in a borderline meltdown. And I just popped open the chart because I think when I did the review back in December, this candle right here, I hadn't taken a step back. And I always had the impression since I started trading, maybe because I was only looking at a US index and maybe the TSX, that they could just go on forever, right? Remember, you've seen those charts of the Dow or the SPX, and that for forever since the stock market existed, there's been blimps and corrections, but it's always been going up. Well, I thought they were all like that, but the US markets, I think they're the exception, keeping going up and up and up until they've had what we're going through right now, which is maybe an asset bubble. There's a lot of information out there that printing of the money, that quantitative easing, the low interest rates. Well, it's not a new thing, guys. Japan has been doing it. All this, they had a housing bubble, they had an asset bubble, and that's what it looks like, guys. And I could even compare that I'll split my screen. And what we're going to do is check it out. Oh, loading. Please wait. We're going to put the Nasdaq. Okay, here's the Nasdaq today. And here is the Nikkei. And look at that, man. Stretch it out. That is what we're dealing with right now. Asset bubble, or this type of exponential or very aggressive slant. See, you had a sideways move here, about here in the move. Try to get it. Oh. Sideways move here. The mountain, the little cliffhanger. Remember that on the Price is Right? Let's go. Let's keep going up. And Nasdaq breaking down below the 12-month moving average. Testing it the next month below, closing on it. And after that, in December, close below, confirming that we had a stage 4 decline. Well, on the monthly chart, guys, that's very, very high trend, high weighted. A lot of the higher trend of the monthly is going to bear down on any types of pullbacks that want to turn into reversals on the smaller time frames. Well, as long as the price action is below that 12-month moving average, as long as it's declining, as long as you're staying behind monthly defined breakdown line, you have a lot of weight going downwards. And look at the similitudes with the Nikkei 225 right here. Same behavior right here, this candle here. Then after that, it closed below, and I think we're about here. This for me is, I'm just gonna hide that here. Okay, right there. Let's adjust. And I think we're very close to being close below 12-month moving average, declining 12-month moving average. The Nikkei had almost like a spinning top, I think, or a hammer, a nail that you kick up. The Nasdaq actually pulled back up. The following month, the Nikkei actually closed above its monthly defined breakdown line. We're about to do the same thing here, or trading close. But after that, you see how it came close to that 12-month moving average. And these examples of these pullbacks, lower highs, but lower high on the cusp of that 12-month moving average going downwards, trading, hitting that monthly defined support, now turn resistance, barely close around all those levels. Next month, a little tug of war, then it would have been a good opportunity to short when that monthly candle closed below that 12-month moving average, below that support turned resistance, and after that try to go back above, but the wick, and then down, the pressure, down. So that's kind of my inspiration for potential play out of the Nasdaq. If I rely on the similitudes in the quantitative easing that they were doing, the zero interest rate they had, or very low interest rate back then, that type of incline, very lots of similitudes between those two types of charts, guys. So you still gotta wait. You still gotta wait for the price action to roll out. We don't know what's gonna happen here, but that's why on most of the charts, everything I've been posting on StockTwits and Twitter, sure, we could have a big or higher head that goes above that 12-month moving average, but what I would like is this type of behavior. This would be pure. No questions asked. 12-month moving average holding strong. You're pulling back to the breakdown line. It's just the perfect scenario right here to short. So we got to see here how it's going to close the December, how the January close. If we're going to be on the line. After that, wait the next month. If we have a small red candle like that, it'd be awesome. I wouldn't want a big red candle down and then I'm far away, and then I waited for that monthly candle close, and then my entries not the best risk to reward. This is the ultimate entry here. And if you were convinced by that candle here in June of 90, then July of 90, you could have waited for that close and say, okay, I'm really turning around the corner. I'm really starting to go back towards those previous lows. 12-month moving average going down. So that's a type of scenario for the next 3 months. If we could have this type of scenario right here, that would be awesome, guys. So use the Nikkei as an example when you've been trading, I don't know, no matter, like somebody's been trading 10, 20, 30 years, he's always seen it up. He's seen the 2001 crash, he's seen the 2008 crash, but he's always seen it go back up. And he's still got to remember, in 2001, the crash did a full retrace. So let me just reset that chart. Check it out. Here's the crash of 2001. It never went back to those highs, guys. Here's 2008, the crash for the Nasdaq. 2001, look at that. That's a bubble, an asset bubble. Broke down. Look how long it took. Full retrace, or almost full retrace back to the beginning. Maybe at least 70%. Then you have 2008. Full retrace back to the bottom here. Back to the lows of that, of the decline. After the bursting of the bubble, full retrace all the way back, almost full retrace, 90%, and then went back up, and then it took years, like 14, all the way back here, 15 years to get back to those highs, 15, even more, right here. If I take that high here, damn, 2016, yeah, about 16 years later, guys, to get back above. So for a buy and hold of the Nasdaq doesn't quite make sense, right? And right now you're barely coming back into the money, if ever you've held through all that. But now what's going to happen is we're already starting to break down, and you might be running into this type of scenario happening all over again. Just like it happened for the Nikkei, it could be happening for the Nasdaq right now. What happened to Nikkei, guys? Well, let's look a little bit of the future. Let's go back. Oh, NI225 Nikkei. So here we had that crazy asset bubble driven by that quantitative easing, driven by low interest rates, or for whatever the reason. And that, look at how long did it take for us to get back to that crazy level, those 39,000. Well, hey, it never did. Buy and hold, even if you're halfway through here and you bought and hold in this consolidation period, which we could equate to our 2015-16 sideways move. that last leg up, they've never came back to those levels, guys. Let me put a horizontal line here. Tuck. And put another one down here. And they've never came back to here. Oh, a little bit here on the way down. But after that, how many years is that, man? That is insane. 89, 99, 10 years. 2009, 20 years. 2018, 2019, 30 years. Buy and hold, man. Buy and hold. So that's like the biggest lesson. And, it's Japan. It's different somewhere around the world. I'm not quite sure it's that different, guys. Not quite sure it's that different. So right now, this is the run they've been having since 2013. Looks awesome, but if you're looking at hindsight, or you look a little bit back more than recent years, it just recently broke up above. Even right here, let's say I want to lower these levels. Anytime, look, it's going up. No, buy and hold. Never quite making it. Never going above that water level. Still drowning. Made it above. Hey, I'm in the money. Only to have the rug pulled under its legs, under its feet, and now it's tripping. So where we are now, guys. Let me do a trend line. Here's my monthly defined breakdown line. And it kind of looks a little bit the same way that the Nasdaq is doing, or how it did back in 1989, but it's breaking down more severely, not hogging that 12-month moving average as much. Broke down, pulling back up, but not pulling as good as the Nasdaq. As you see at the same period right now, the Nasdaq has already pulled back to its neckline, to its breakdown line, its support and resistance, and the Nikkei is not quite there yet. Will it make it? This would be the good scenario. Like that, great risk to reward entry. Hit that resistance, make sure that 12-month average is getting closer, it's still declining, and then after that you could enter short right here. If you want more details, well, zoom in on the weekly. Where's my weekly defined? Here's some weekly defined support. Here, maybe here, only tested once. Yeah, right here, weekly defined support. Right now it's hitting that weekly defined support. Let's see if it closes. If it doesn't close there, maybe the next week or two. I don't know how hard that's going to hold, or else you're going to start hitting that zone. Monthly defined support, weekly defined support, below the Ichimoku cloud. Lower highs. And either way, if it bounces back down from here and down, lower highs. If it goes all the way up here to the weekly, lower highs. If it goes all the way up to the monthly defined, we're still doing lower highs. That's a downtrend. This is going to be hard for it to return up in an uptrend, but right now we're in a downtrend, and pullbacks, I have to consider them as pullbacks to resistance areas and possible shorts. Ideally, if you really want to short the Nikkei versus the SPX instead of shorting the SPX, well, you'd like the Mansfield Rental Strength to turn over. Make sure you're underperforming the SPX, and then you know that the Nikkei is a good short, a better short than shorting the SPX. So that's how I break it down, guys. History, look back at the charts. They don't always, there's not always a happy ending. It's not guaranteed that the U.S. markets will have a happy ending. Listen to the chart. Put your sell stops where you have to. Play the trend. And just be careful, guys. This could be happening to us very, very soon. All right. Ciao, guys. Thanks for listening.